Demand and a falling dollar are helping commodities trade at records. Gold's tipped to rise a fifth week after prices reached $811 an ounce last Friday. And crude oil may trade at a record this week as well. It had a record close last Friday, settling at $95.53 a barrel. Joining us for more from Sydney is Michael McCormick. He helps manage about $200 billion Australian dollars, Leyland Private Asset Management. Good to have you with us, Michael. So what is looking more exciting now? What do you think? Is it gold or oil?
Well, I think actually gold probably looks a little bit more exciting going forward. I mean, there is a natural catch-up with gold and oil, and that has been evident over the last 2 years. But I still think that gold's got a long way to run. It's done everything that was very good consolidation on the technical side in the last 12 months. And I think that over the next 12 months it could try to get to that 850, the old highs back in 1980. Now, if that's to occur, then you've actually got a whole new ball game on the gold side, and I think we may well see, as some pundits have been saying over the years, $1,000 US over the next 12 months or so. It probably does need a little bit of consolidation to make that technical story look a little bit more convincing, and it has run very hard really since the start of August. So I wouldn't be surprised to see some type of consolidation, but obviously the biggest factor at the moment is the US dollar continuing to fall, so the correlation between the two, the negative correlation, will continue. And as the US dollar falls, obviously the gold will continue to perform.
So, Michael, who's going to be better placed then to benefit from the rally in gold prices? Is it going to be Newcrest, Lihir Gold, or Newmont? I mean, they've given up on hedging or forward selling off production here.
Look, I think that's the big factor in relation to all the gold producers. Anybody who's now de-hedged will have that leverage. Newcrest has obviously got a little bit in there maybe for a takeover premium as well. And I do think that over time they will become a much larger producer. They've indicated they are looking for acquisitions on the listed side in Australia. Up to 5 listed companies they've been looking at. So I think the biggest thing we're going to see, both in really all resources, including the oil sector, is consolidation, further consolidation. It is just going to be cheaper to buy reserves and or resources in the ground rather than go out and explore for them yourselves. Exploration's become very expensive. The ability to get labour in Australia is still one of the greatest difficulties, and on the oil side, drilling rigs have become extremely expensive over the last 2 years.
So are you going to be planning to buy more shares of Newcrest, Lihir, and Newmont here?
Look, I think Newmont still looks like the laggard. Its quarterly report the other day was optimistic that they finally turned the corner, and I think that just might see a little bit more longer term interest in the stock. It's a long way from its old highs. Newcrest, however, is back to new highs. When you look at its net present value, you certainly would say it's fairly priced at the moment. I think for it to continue to perform, it needs better news out of its major mines, and also probably a rising Australian dollar gold price. So those two factors are going to be a big thing with Newcrest going forward.
All right. What about for oil then? Is this a seasonal uptick for oil prices, or is higher demand going to stay with us even after the winter season in the Northern Hemisphere?
Well, I think the oil, we've been saying for some time that there's a big issue with oil. Now, whether the peak oil argument is starting to get some credence across the world is open to argument, but certainly the demand is still there, and there has not been any large finds for many years, and the cost of exploration again is very, very high. So I think the oil side, it's obviously got a fair premium in there for both political risk and any disruption to supply around the world. And if there is still a major disruption from here on supply, and that obviously may mean some political risk or any action in the Middle East, there could still be another $10 or $20 pretty quickly on the oil price. If things calm down, you could see the oil price coming back a little bit. I think it has run, and it's even surprised us as to how dramatic the run has been over the last month or so.
Michael, we got about 30 seconds here. You're looking to buy more Rio Tinto shares now that it's secured 90% of Alcan?
Well, I think the aluminium long-term story looks extremely attractive. I think we've looked at their presentations and the demand that's coming across the world. China has now got some big constraints with their production of aluminium, particularly on the power side. And I think that's why some of these bigger companies are staying with aluminium and even expanding. So, look, I think the long-term outlook for the merger is going to be extremely positive for them. and I think they've taken a 5, even 10-year view on it, and I think you'll find that Rio's does extremely well with it on that view. Short term, look, we are going to have some hiccups. I think obviously the US economy still, even on a perception basis, if there's a greater slowdown than expected, that will flow in on a short-term basis to perception as to where resources are going.
All right, well, thank you so much for joining us. Do appreciate it, Michael. Michael McCormick there.
No problem.
Leyland
Thanks,
Private
Kate.
Asset.